right, well, hello again, everyone, and welcome out to the US Payrolls class. We are about 10 minutes away, 10 to 11 minutes away from this report. So let's do a quick analysis as we discussed that in yesterday's preview class. So hopefully we're able to kind of catch the preview just to prepare yourself for this payrolls report. So let's get into it and see where we are at in the markets and where we need to set up our trades beforehand or afterhand. Let's kind of go through and make the decision. So we are looking at this report. This is supposed to come out. As you can see, that the unemployment rate is supposed to be increasing to 3.6%. I think the biggest sort of range in the consensus is the employment change. They're looking at 193,000, but if you look at the Wednesday jobs report, the private jobs report, that was way below expectation. So interestingly, if you look at the jobs report, I mean, I think 7 out of the 8 or 8 out of the 9 has been beating expectation. So the question is, can we miss the expectation this time? Lately, we have seen these layoffs that are taking place. So I think we can kind of look at this and see if this could be a little bit more on the weaker side. So if it's on the weaker side, then how are we going to position ourselves? Let's talk about the strategy here. And again, before we enter any news event, we always talk about, are we going to enter before, enter on the news, or second stage? And this is where every trade is different. So you need to realize that you just have to be consistent with that decision making. Sometimes I can enter before, sometimes I can enter on the news. They all has its pros and cons, and make sure you're understanding that, especially with the slippages. So if you're just using a buy stop order, you could be prone to a slippage, but that's why we're going to use, if we are looking for putting the trades out there first beforehand, then we would need to use a stop limit order instead of just a stop order. And as always, entering on the news can be a whipsaw here. I'm not sure if this is the one that will cause a whipsaw, but yeah, one of the things that we hate, especially if you're going for entering on the news or before the news, is the whipsaw here. So whipsaws usually happen when there's just, there's two opposite forces and markets just can't decide or make up its mind. So if I look at my strategy today, I think I won't be. Actually, I would like to enter it before the trade, or actually do entering on the news. So which means that having your stop losses or having your buy stop or sell stop entered beforehand. So let's do a quick currency basket analysis, and we'll kind of go through and see what the markets are doing, and then make a decision and pick accordingly. So let's just jump right into the trading view here, and then study these currency baskets and decide which one would look the best here. So the dollar, again, it's an easy way to kind of filter this through is by just looking at these currency baskets. So dollar is actually a little bit stronger. So I talked about this in the update yesterday. I mean, weekly chart, dollar looks interesting. I mean, look at the rejection that we had onto the downside. Markets totally rejected this move here on a push lower. So I think the dollar kind of stand a chance to have a bit of a rally here, especially if the jobs report comes out weaker than expected. I think then that could be a decent report for dollar to lift higher. But again, right now you can see that this is in a strong downtrend. So if I look at an hourly chart, or you look at any other time frame, you'll notice that in the shorter term, momentum is up. We kind of given back these level, and we are back towards this level the way we were on the FOMC day. So I think at this point, if I look at the daily chart, I mean, I would love to see this get above this 13-day period moving average. Volatility is kind of picking up a little bit. I would love to see a breakout if this one have a little bit more room to go higher. So we want to be using, again, this is one of the reasons I think I would like to use a stop limit order instead of just a stop order or entering it beforehand, because we need to get that breakout in order to get this going. And that's really, I think that's really where we will find this trade here. But right now, I'm not really seeing that. So I need to get that breakout for confirmation. So I think above this level, that's what I want to see on the basket. Let's do an analysis on other currencies. So I mean, impressive enough, Euro has made a full recovery so far, and so I think with this Euro recovery, I'm actually going to be looking at Euro USD as well and see if there is more on this Euro USD chart. Now, the yen actually looks the best But lately, I mean, we have been mostly trading the dollar yen around these news events because that's where we're getting the biggest move. I mean, yen looks the best right now, but I mean, I want to just point out where the dollar yen is because if we need to look the yen out, we need the dollar to go lower. I think that's correlation that we're getting here. But realize the strong support that we have here. So again, I don't want to be jumping on any the yen crosses against the dollar, especially if we haven't really broken that down. So you can see that we're kind of sitting at these levels where it could go either way. We have the Swiss franc, which is kind of going sideways, so we're not going to be focusing on that. The British pound had an impressive fall yesterday, but I think today it just reversing some of his gains, but some of his losses from yesterday. But we are not really seeing a big velocity here. So I think this is where you have to kind of really focus on what do you think, or where you think it will be the best move. Right now, I mean, look at Aussie. Aussie looks the weakest here, so it's a easy call right now that Aussie is the worst performer. So if you want to be looking at Aussie on the short side, I do like it. The entire night it actually has been underperforming, and look at that, it's right at the support area. We had a massive run in January, about 6% run in an Aussie dollar pair. So I think we can see some pairing of that. And then again, we're looking at the Kiwi. Kiwi is not moving. So always focus on currency that's moving. So I think we shortlisted the Aussie as a weaker currency. Now, what do you want to pair it with? Is it the dollar or is it the yen? That's a big question here. A lot of times, if I'm not sure if to go with the dollar or yen, you can always do half position in dollar and half position in Aussie yen and see which one moves. Because they're both, if you're expecting a bigger move in the Aussie to the downside, let's say, and we just don't know if the dollar will be the best pairing or the yen will be the best pairing, then we can just kind of go half and half and see which one it moves. If you have a better idea, you think the dollar likely to do better, I think in that case, Aussie dollar, let's say, where do I want to enter this Aussie dollar play? This is going to be right. I mean, we're right at the parabolic SAR here. We got a support right here. So whenever you have something sitting right at this level, I need to see initial move. I mean, so the support on this, the massive support is at 69.80. The current price action or price is sitting at 70.46. So there's a nice 60 pips to be had over here before it can test the support here. So if I need to enter this, or I mean, the fact that it's sitting right at the support here, there's always a couple of things that we can do. We can either enter half a position size and maybe enter the other half if it breaks at 69.80, or have our sell stop right here. But remember, every time if we are looking for entering on the news, we need to understand that there could be a little bit more of that wiggle room before it decides where the market wants to go. So we don't want to be getting in as it breaks lower and then we just see a total turnaround. So I think at this point, I actually going to be looking at half a position size here. I'm actually going to be, entering it on my different screen here. So I'm going to leave the chart over here because we need to watch what the market's going to do. So that's my game plan here. Use a half a position size to enter here instead of using a sell stop order because, there's not a whole lot of wiggle room. And next thing you know, it's going to make a big run to the downside. So let's bring the time frame down a little bit. I think this is the best one I like. I will also be looking at dollar yen as well, but right now this is the best one I like. If you want to wait till it breaks below it, I think if you're looking at this level, this is about 70.35. So there's only about 10 pip difference here, and again, that's the reason why 10 pip is just not enough for me to put a sell stop there because it's more than likely that it's going to fill that. So I'd rather use a half a position size. If it goes my way, it's great. If it doesn't, where do I want to cut it? I'll cut it right above this area. So let me just draw the line. This previous high that we have here, 70.72. So entering at about 70.45. The stop is at 70.72. So about 30 pip stop on the upside. And again, that's half a position size. That's only 15 pips. I can afford to take a 15 pip stop loss here. And with the target is going to be aiming towards that 69.80. So that's the game plan. That's what I'll be entering. And let's also do a split view here because we want to see what the equity market is going to do. So on the left hand side, let's just throw in the equity markets, US 500. You can kind of do that on your in your trading view, because those are the futures market. Let's change the symbol here, and let's keep the same interval. Okay. All right. So let's go on a shorter term chart and do Aussie USD. All right. Well, we already have the move here. Looks like it's down the markets, and we are down on the Aussie USD. So as you can see, this is a good price action to have again, especially if we entered already at 70.45. It's sitting at about 69.94. So we are up about 50 pips on this trade. I use a half a position size, which means I'm up like 25 pips. But again, this is the kind of a trade I was not really 100% on the movement. Again, always you can use a half a position size and kind of build it on later on as you get a little bit more clarity on it. But again, these are again one-way moves. As you can see, it didn't have any sort of volatility to it. It just went one way. And notice that we are now getting correlated moves. The Aussie dollar is down, and is the market. Remember, just till a month or a month and a half ago, good news was bad news for the markets, and bad news was good news for the markets. We had that kind of thing playing out. I think that's kind of behind us, and now everyone's focused on the jobs number, the economic numbers, and that's affecting the markets. And we're not really getting the good news versus bad news for the markets. So the equity markets are down, and so is the Aussie dollar, which means the dollar is up across the board. So my question again, I have another question here. What do I think? Where would I want to move the stop? So I have a nice 45 pip stop, 45 pip profit already built in. So I mean, with this kind of move, I'm actually just gonna go in and move my stop to break even, because that's a good enough of the move that we have based on the current volatility. I'm actually happy to kind of just move my stop to break even. So I love the fact that we are already in the profitability, into the stop even, and I can still look for more opportunities if there's any more follow through. So the stop goes right below, and let's see if there's anything else that we can find. So let me just take a look at the numbers first and see what the numbers were. So look at that. Oh, wow. Look at the jobs report. I mean, we are seeing 517,000. Holy cow. That is a beat. So we are seeing, the best report, and we're seeing a negative market price action. So it looks like that thing is continuing here. But again, it's a nice movement that we're getting between the dollar and the equity markets. So the markets are down, the equities are down, so we have the correlation there. But yeah, I mean, if we take a look at the jobs report, I mean, this was a blockbuster report. I mean, let's look back in time. I mean, I don't recall seeing. I mean, last time we had 500 in that range was back in August, and here we are with 517. So I mean, this is it's a very strong jobs report. Not something that the Fed, the FOMC wants to see, and that's again bringing back the dollar to the upside. So I still like this here. Like I said, our stop is moved to break even, but I'm interested in kind of looking at more opportunities here. So let's go into Euro USD. I like the dollar strong play here, and since our stop is moved to break even, we can look at other opportunities, because again, we have no risk on the table. So let's take a look at the euro dollar. So euro dollar had a nice little move, nice little break right here. And where do I want to pick an entry on this? So this is, again, I'm going to go down to let's say a 5-minute chart. As you can see, it's actually staying below it. So a good price action here. I like this further on the downside, especially if you look at the daily chart here. I mean, we are right at this 13-day moving exponential moving average here. If it breaks below that, this is the only hesitation I have here. Look at the close daily chart here. We're right below this level here. So there's going to be some support at about 108.50 area. If it breaks that 108.50, I think that's where I would like to put my sell stop order to jump on. And usually, if I want to do that, where my stop's going to be, because we have such an expanded candle going from 109.20 to 108.50, there's a 70 pip. So, I might want to see a couple of more candles before I can make that decision, and then use that candle as a high. If we can get a couple of inside candles right here and then move out after, I think I'll just use a very tight stop on that. But I think right now I do like a dollar onto the long side here. This report is not what the Fed wants to see, and I think this, after the FOMC on Wednesday, this is going to be putting more bullish bets on the Fed to tighten further. So I think that's a play here, and regardless of what currency pair you're looking, I think they all kind of look good. Let's go on the Aussie dollar. So a question here I have is that, would you leg into the Aussie USD pair? So it's a great question, because on a normal day, I would leg in, no problem. But because you always have to think about that, I have limited amount of time for this position to develop, because I don't want to hold things over the weekend. If this breaks, I mean, my 69.80 is my level of support. I think if it breaks that level, after that level, I need a confirmation. I mean, look at the daily chart. This is the parabolic star is. This is where all the support is. If you can break that level and continue moving down, I don't mind doing a legging strategy there. But right now, I'm happy to hold this without much stress and just see how things play out. And if there's a follow through to this, I think next week, going into Monday, we'll have great opportunities. Especially, I mean, take a look at where the dollar is sitting at. Let's go to the dollar basket right now. All right. The dollar basket is up 0.77%. I mean, look at that. We kind of broken right above that level. And this is, again, a good sign. Let's take a look at some other charts. And let's take a look at the dollar. And you can see, I'm going to go on a 4-hour chart, and you can see that we are above the 20 and the 50-day moving average. So your scoring system just improved quite vastly just with that number here. So I think dollar could have some more legs behind it, more relief rally, because the expectation were very weak for the dollar, and this is where markets are catching you by surprise. Look at the daily chart right at the 20-day moving average. So if there's a continuation, it can actually go from a 20 to 50 moving average. Absolutely. So again, it all comes down to what currencies that you think the dollar would do best against. I mean, I think I do like dollar Swiss franc as well. Let's see where the dollar Swiss franc is. Yeah, dollar Swiss franc is moving nicely as well. So you can see that we have big expanded candle of regardless of what pair you're looking at. So what we need to see is that candle kind of settle down, and then look for a follow through. If there's a shallow pullback, then we can use this shallow pullback as a buying opportunity. But again, if I go on a higher time frame, I love the fact that we are kind of erased all the losses that we had on Wednesday. So I think at this point, it does stand a chance to run higher a little bit, but I need to get above this 20-day moving average and change the scoring here. So great movement today. All right, let me know if you have any questions. I think so far it's always nice to see things that play out, and then you can always kind of go through and see the decision-making process that go behind it. I always say, follow your trading plan, follow your book. Everybody trades differently. Everybody has their own sort of comfort. Some traders don't want to be entering it beforehand. Some traders want to wait for confirmation or for a second stage entry. Again, they're all good strategies. It's all about being consistent with it, and if there's a good follow through to this, you can still catch a good trade on a second stage entry. You just have to keep in mind how long I'm going to hold the trade for, and if your time horizon is higher, you can do that. But you also need to keep in mind is that today is Friday. You have less time. You don't want to hold things on the weekend. Then just look for a shorter time frame. Get in and get out. And I think I'll cover this in the currency room on the weekend and see how things end today, and we'll update our outlook accordingly. One last look. Let's see how the equity markets are doing. I think the equity markets could head lower today. I mean, we had the earnings that came out from big names like Google and Apple, and they're all down. So I think that will kind of weigh down on the markets. So I'm actually looking for a risk off day, and I think that's the reason I like the Aussie USD, because Aussie is more risk sensitive and it was showing relative weakness. So I like that trade, and we are now pairing with the US dollar. You can see that right now it did kind of found the support right at the 69.80 area. I don't know if this will break that 69.80, but we need to see a break of confirmation of that in order to make another leg lower, which again, as you can see, will all go down to 68.80. So that's the game plan here. Again, if you have any questions, you can always reach out through me by email. Let me know if you have any questions. Otherwise, we'll wrap things up here. We'll let the trade kind of ride here, and then we'll exit before the end of the day. That's the game plan. And again, if market stays on the lows, I don't mind holding it over the weekend. That's my general rule, is I don't mind holding a risk off trade. I just don't want to hold the risk over the weekend. So if this stays weak and wants to stay at the lows of the day, I mean, maybe we'll just hold it over the weekend. But if your strategy is that I don't want to hold it on the weekend, then we can always re-enter it on Monday or Sunday night when the markets open up. All right. Thanks everyone for joining. Have a great rest of the day, and we'll see you in the next class. Cheers.